The Japanese yen remains steady in range against the dollar and euro in the Asian session today. The Bank of Japan left rates unchanged at 0 to 0.1% on an unanimous vote as widely expected. The stimulus programs were also left unchanged. The central bank noted that Japan's economy appears to have stopped weakening, and pace of export decline has slowed as international investors' risk aversion has abated, and the global economy has shown signs of picking up. The Japanese economy is expected to level off more or less for the time being. CPI is expected to turn negative due to a reversal of energy prices but would then be back around 0% again. The Bank of Japan pledged to pursue aggressive monetary easing, but emphasized that it aims to achieve price stability on a sustainable basis that is achieving its 2% inflation target at the earliest possible time. Also released in the Asian session today, Japan's GDP unexpectedly contracted 0.1% quarter-on-quarter in Q4, versus consensus expectation of 0.1% quarter-on-quarter growth. That's the third straight quarter of contraction even though it improved from Q3's 1% quarter-on-quarter drop. Japan is still in a mild recession and the 0.6% quarter-on-quarter fall indicates that Japan is still staying in deflation. The data should strengthen the case for Prime Minister Abe to push for more monetary stimulus to end deflation and boost recovery. The Japanese yen is steady so far as traders are eyeing the G20 meeting in Moscow later in the week. The key focus would be whether yen's recent depreciation, triggered by Prime Minister Abe's rhetorics and push for more aggressive Bank of Japan easing, would be targeted. Markets were confused by the G7 statement and subsequent comments from officials, and it's speculated that emerging countries could complain. Though, Russian Deputy Finance Minister Sergei Storchak said yesterday that the yen is definitely overvalued and there are no signs of intervention. In the U.S., St. Louis Fed Bullard said that 2013 would be characterized by less macroeconomic uncertainty, and that bodes well for U.S. macroeconomic prospects. The euro will likely see either a stabilization or some recovery, while emerging market economies are expected to fare better. Also, domestically, last year's election in the U.S. cleared up some uncertainties and partially resolved the fiscal concerns. Though, he's what to sees through the spring at least how the economy develops, before suggesting reducing the size of the open-ended Q3. Looking ahead, GDP data from the Eurozone will be